Dave has some information about the real estate market.
We are back to the 90s. I don't know if you guys realize that, but the loan volume, the sales volume is actually back to the 90s. So that's actually a good thing because there's a ton of opportunity. Johnny, what's the opportunity?
Absolutely. So guys, in case you haven't noticed, there are more sellers coming to the market now than there were last year. So that's created a bit of an imbalance, especially if you are a buyer. So not only are there more opportunities out there, but interest rates have also come down. So if you're a buyer in today's market, it's way better to buy now than it was this time last year. So there you have it.
All right, we got
All
this.
right.
Let's go.
All right.
Woo, back to the 90s.
Back to the 90s. Good news. Good news. And what's funny is I bought these pants yesterday, and the person who bought them for me didn't. Tag moves.
Yeah, sure. You really paid
Yeah,
for it.
I'm gonna go return them later today.
Shows that they're genuine. It's like the tag on the shoes.
There you go.
It's a good look on you. You should keep it.
It's a good look. Just keep it. All
Bring
right,
the
sounds
90s
good.
back.
All right, let's continue on with it. Tell me something good. Gina, what do you have back there? Tell me something good.
Okay, so I got two escrow closing on Monday, another one. Yeah, we have.
Awesome. Well, round of applause, Miss Gina. And then, Crystal, you guys are doing something good.
Yeah, I had one close last week. I have another one closing Friday and another one closing next Wednesday. Two of them with Lindsay and she skipped butt. So
Wow. There we go.
I just want to commend the group here. I think we're surrounded by so many good people and hard workers, and we have a guest today. Me and Tom met him at the gym at freaking 7 a.m. and told him about the meeting. He came down. So
What's your guest name?
5:30 a.m.
we were there at 5:30.
Oh my gosh, work out with this guy. I am so sore. Jim Porter, tell us a little bit about your show.
Well,
Play our theme song.
Oh, sorry, Ben. They're a little
No,
bit.
you're all good. Well, your guys' theme is 90s today. I wasn't even born yet, so you know, a lot of learning.
yeah, head on out. You're gonna fit right in.
I have my license exam in 2 weeks, so I will hopefully be getting my license soon. I currently work and live up in Auburn, California. I'm 24 and I'm very excited to tap into this market, you know.
All right.
Well, Jim, tell me something good.
Well, I think it's good for a new buyer, and we had 8241 Zenith Drive fall out of escrow, and so it's now available. It's a 4 and 3, 2 master bedrooms, huge master bedroom upstairs, and new landscaping, totally remodeled, 1,940 square feet. 520,000, and seller has agreed to concessions.
All right, let's go. Bring your buyers. What was the address one more time?
And it's 8241 Zenith. It's vacant with a lockbox.
There we go. 8241 Zenith Street for those of you on the recording.
That's
Right.
Diana's listing.
Diana's listing.
Her
Margaret.
first one.
I got a listing that I've had on the market for a little bit in Fair Oaks and they just did $100,000 price reduction.
Yay.
On 7624 Canyon Drive.
How'd you get them to do the price? Because a lot of agents are like needing to do that right now.
So I literally just went on and pulled up the stats and showed them the statistics of what's going on. I showed them the prices in the area. It's a tough one to price because the house was built in 1830 and it literally sits at the top of the hill on Sunrise Boulevard, like overlooking Sunrise, so it's a little busy. But I also sent them Ryan Lundquist, Sacramento appraisal blog. And I said, look, check this out. This is a local appraiser who runs lots of statistics and gives us lots of updates on the market. I encourage you to read some of the articles and you guys think about it. I think we need to make a major price reduction because 4 things sell a home, right? Everybody know what those are: price, condition, location, and marketing. So I said, I know we're doing the marketing. The location sucks. Just it is what it is. It sits on Sunrise. There's no, we can't change it.
Sunrise and what?
Old Fair Oaks, like right Fair, like it's where Fair Oaks Village is.
Okay.
I can't think it's there. It's before, so if you go, where's that Players, California.
Between Greenback and Madison?
Right after you cross the village, right? You know, it's before
It's
you
sold
cross-
Google Maps. Don. Go Google Maps and you'll find it. Guaranteed.
Sits on Sunrise Boulevard. So I said, the location sucks, the condition, it needs a lot of work, and do you want to put $100,000 into it? And
Yeah.
then it comes down to price.
Yeah.
Price is it, so that's the only thing we can, decide. on, so.
Yes, love that. By the way, Ryan Lundquist was the guy who said real estate is back in the 90s, right? So credit where credit is due, Ryan Lundquist. Thank you so much for that article.
Yeah, reference him all the time, you guys. He's posting some great stuff and he's very, he's pretty neutral and but he gives a valid opinion.
Yeah.
And it's anytime you can get somebody else's opinion than yours. If they just look at me, they're like, oh yeah, you're just trying to sell it.
Yeah.
No, go look at, other people's information in the market.
And he's a gift because it's a local voice. It's not like
Exactly.
national news.
Send
Okay.
it in.
Yeah. And then was there somebody, Alex?
Yeah, so I finally have my commercial listing at 1511 Del Paso closing. It was the Casabella furniture store that burned down. I had it in contract earning both sides, and I was in Napa over a year ago, and I got a phone call saying, hey, did you know your listing is burning down? So the building.
You know your listing's burning down.
Yeah,
Oh,
yeah,
man.
so
It's
so
hot.
so, you watch $40,000 in commission go up in smoke, literally.
Literally.
But I relisted it as a land listing and it's closing next week.
Can't keep a good man down. Brand new land listing.
And,
He's making $2,000.
yeah. At least it's closing and both parties are happy and I built some great relationships from it. But yeah, craziest listing I've ever had. It's gonna make great content for YouTube.
Absolutely. And you have something else happening tomorrow too, correct?
What's that?
You have something else happening tomorrow too.
Yeah, so tomorrow, right here at 10 o'clock, I'm doing my KV4 like a pro. And we're gonna go over the 21-day challenge. So for all of you agents out there that have a neglected database, which is 70% of the people in this room, we're gonna introduce the 21-day challenge to engage with the database.
Awesome. And then what's the cost of that tomorrow?
The session is free tomorrow.
There you go. So it's free. So if you want to make more money and not pay a dime doing it, tomorrow, 10 o'clock here, right?
Right?
Trailblazers.
Are you
Wonderful.
gonna talk about iHeartMedia or no, wait?
No, now it's perfect time because Barry's gonna give away some money next. So
Oh, you're gonna give away money.
Barry's gonna give away a check. Yeah.
So you guys might have seen this display that's here is for iHeart Community Day, which EXP once a year. In the first week of October does a community day. And this year we decided to put together care kits for the unhoused in the Sacramento area in partnership with Homemade. So either you can donate supplies, there's a list over there of supplies, or you can sponsor a kit and kick me down some cash and I'll go shopping for you. $10 per kit is great. Barry just bought 10 kits. So thank you very much for that, Barry. And also Clark did as well. So thank you. So I'll be shopping on Saturday and Sunday. And then Monday, you could come in here from 12 to 2. And we're gonna be putting them together. So the more kits we can put together right now, Brent just donated $200 as well. So I have, and then I had some random people on Facebook donate money. So I've got about a little over $400 or $500 to go buy supplies with. If you would love to give me some cash, I will happily take it to contribute, or you can go buy supplies or you can show up on Monday, 12 to 2.
What's the best way to get you money?
Cash in your hand right now, or or Venmo. If you come up to me, I'll give you my Venmo or whatever.
Okay, easy enough. All right,
Apple Cash.
all right. So she takes Apple Cash, Venmo, and cash.
Zelle,
Zelle,
you name it. I'll
gold
take it.
bars, gold bullion, right? So
Silver.
Crypto.
yeah.
Only full points.
All right, and then upcoming events. Oh wait, Barry, you're gonna give away some money.
Oh, let me see here. I just got a big check. Hey, who's that? Is there that person in the room? All right, well, here you go. You gotta fit this in your wallet. Believe it or not, the bank will not cash that. We'll cash that one. All right, guys.
Come to the front, take a picture.
So, okay. So the $500, all she had to do was make a referral. Was it easy to do?
It was easy to do.
Did we take good care of your client?
I've heard you have.
Awesome. So, hey, if you've got somebody that has a property that needs to be managed, I will be glad to do that. In that situation, they had actually several people who did not want to be managed that we took over, and they are now being managed against their wishes. All right, thank you, guys. Expert property management. 916-225-7777. 916-225-7777.
Man, we do have some upcoming events. This, what we
Jen?
did. Next week we have James be talking about inspections. Guys, this is so important. Like, raise your hand if you, so if you are representing buyers, how many of your buyers are asking for the inspection reports now? It seems like almost every single time. I'm getting questions, hey, where are the inspection reports? Where are the inspection reports? If you have a listing and you don't have inspection reports, you're coming from behind the eight ball. You need to get those done. Jen's gonna be going over that next week. And then the week after that, I believe it's Pete Car. Boom, with Matt Plummer. So we had, what's it? Tina Call was here last month. The month before that was Bill Pipes. This month is going to be Matt Plummer. Brent's flying him out from Vegas, and he's gonna be speaking on money matters. We're gonna be creating budgets and planning for 2025. And so you can just register right here with QR code or go to moneywithmatt.eventbrite.com. It's free. It's 10 to noon, and then we will have lunch afterwards here in the office like we do every single month. Any questions on money matters with Matt Plummer? And then, thank you. You read my mind. And so, EXPCon is coming up at the end of this month. So they've combined, what was it, shareholders and the EXPCon, they now combined it. So now instead of going to have to go to 2 events, you go to one, October 27th through 30th at Miami. If you like cigars, then come on, let's go. It's a free cigar trip, right? But it's going to be an awesome, awesome event. And if you are icons, if you're working towards icons, you want to go to this so you can make the most of your icon earnings. And then do we have, and so before we let the JJ Mac team, I just want to remind everybody, Cabo is coming up. It is March 10th through 16th, I believe is what it is. Just go to expcabo.com. You will find that. The tickets, they did not raise the rates on the tickets. They haven't raised them in a long time. It's only, I believe it's $4.97 for a ticket into the event. And right now, I just looked this morning, don't buy Southwest flights. Recommend you do not buy Southwest. I don't know what the heck is wrong with them, but it was $1,400 round trip for tickets on Southwest. Don't buy Southwest. There's good news. Tell me something good. Tell me something good, please. $400. Alaska Airlines direct there and back round trip. Cool. Right. So right now the tickets you can get them for $400.
Says buy the airplane first and then you'll go.
Yeah. So but anyway, that's EXP Cabo. What I would do is if money is a concern or you have to budget for this, because what's coming up soon? Thanksgiving or Halloween, Thanksgiving and Christmas and New Year's. Oh my word, you don't want to be trying to buy plane tickets after paying for all of that. So I'd recommend you build it into your budget, get the tickets now. And then, slowly start accumulating so that way, and buy the insurance package, and then if it doesn't work out, you're not out the money, but at least you started budgeting for it. Is this helpful? $400, get you down to Cabo and back. Okay.
Great Christmas present.
Great Christmas present. There you go. Christmas present to yourself. Or to maybe some agents who are looking to grow their business. So, blah, blah, blah. Now we have the time for where we have our lender update with JJ Mack. Everybody, please give him a round of applause.
All right. What's up, guys? How's it going?
Great.
Great, we're doing good.
Man, I walked in here, I see this. I don't think have you guys ever seen Johnny without black on? I still can't get this. I don't know. It's gonna be burned in my mind forever now. I also felt like put on here. I also felt like when I saw him talk about the 90s, do you remember the 90s how you used to put the CD in the burner, like in your computer?
Yeah.
Yes.
The disc man without the skip.
Yeah, you put it in there and you like label them, you put like cool things on there, give them to your girlfriend or whatever. I don't know, that's all just like came to me. I heard about the 90s. Anyway, yeah. Time machine. All right, well, next week, I'm just gonna let you guys know Jake's gonna be in Hawaii. So if you need something from him before he leaves, he's not gonna be here next week, but you guys can always call myself or Lindsay or anybody else. But that office will be a little empty just because he's going to be here. So we wish you have a fun time in Hawaii, but we'll look forward to having you back. And then thank you all so much for coming and supporting us at Oktoberfest. We had such a great time. I look around here, I know a lot of you were there. So I'm so happy that you all came to join. Hopefully you had fun and we're looking forward to our next event. Not going to be for a while, but thank you so much for supporting us and always being around. We appreciate you guys and we do this for you. Okay, so a couple of things I wanted to talk about today. And the reason I wanted to talk about this is I had Johnny over at our house this last weekend. And there's a transformational thing that happened to me several years back that I haven't really talked to you guys about. And that transformational thing that happened to me was talking to this coach of mine, and this coach talked to me about a push or a pull. You guys heard about this before, pushing versus pulling?
Yeah.
And the reason and what's good and what's not. And so I was thinking about this because his little boy Jack was in our front yard, and we had this little red wagon. And this little red wagon, and he was trying to push this red wagon by the handle. And when you try to push a red wagon by a handle, what's going to happen? You're not going to get very far, right? It's going to go left and right. And he was getting frustrated. I said, Jack, pull it, And he says, oh, okay. Starts pulling, and he gets to his destination quick. And it was like the light came on. And then ever since then, he just started to pull it around. But I feel like that's what happened to me in my business about 5 or 6 years ago when I heard this theory. And so really quick, do you guys have any idea like what a push or a pull, any example you guys want to share of what you might want to do in like a marketing technique or how you might talk to a client? What would be a push versus a pull? I can give you one if you guys don't want to answer, but anybody?
A poll would be like, okay, we just looked at this house, but do you see this vacant one around the corner? Why don't we go look at that? Let's go look at it.
Yeah.
Is that a poll?
A little pushing. You're
That's
like,
a push.
let's go look at something. But maybe, okay, go ahead, Tom.
Not in any particular client, but with, as realtors, when you've got a client who's got cold feet for whatever reason, this has happened to me a lot recently where met people who, oh, we got to make an offer, we're excited. And then the next day it's all of a sudden, like, oh, we want to wait. Oh, we've thought about it. And they, for whatever reason, maybe it's the election, maybe it's interest rates, whatever reason, if you push on them, it's going to go nowhere. You're going to damage the relationship. So rather go pull another client from somewhere who's ready to buy now. Like you can't force anybody to do something, but you're looking for the people who are ready now. And you just keep going and going and going until you find them.
That's a great example. And one thing about that example that I wanted to share with you guys is because I know there's a lot of newer agents in this room here. I know you're trying to get your license, so I commend you for that. And hopefully if we can do anything to help, let me know. But one of the things you'll notice when you're a new agent, we all try and push a lot, right? We don't have any clients. We're trying to do everything we can just to get a deal in escrow. We got to make something work. And so it's just like us, we want to push those deals through. And that's okay sometimes, when you're marketing and you're trying to, push people to call you and whatnot, pushing isn't bad. It's just when you have a pull like that, you say, hey, what would your client think if they called you and they said, hey, we're just not ready. This is too much. We're stressed out. We just need to step on the brakes for a little bit. And then you say, oh my gosh, I totally understand that. Let's talk about it. Why do you feel that way? Well, when do you think you'll be ready? How do you feel about, maybe lowering your purchase price a little bit? Instead of saying, oh, really? Well, shoot, I think you should really do it. Now you're pushing them into something. If you're talking to them and helping pull them along, it's going to be a much better technique, and it's going to earn you what? It's going to earn you trust.
Yeah.
Trust and referrals. And so that's the biggest thing, is earning trust with our clients. Go ahead.
And I just thought of it as kind of like a magnet. This is a great point, because you want to have people be attracted to you, kind of like you have a magnetic personality or whatever. So they're kind of like a magnet. So they're being pulled to you instead of reaching out to them. Like I just thought of a magnet.
No, I love that.
Quick little-
It's so true. If you want to be a magnet, and the way you can be a magnet is by pulling people along with you. And so the reason I thought of this today was the market that we're in right now. We're seeing a lot of pushing, right? A lot of realtors out there like, come on, you got to buy a home now. It's the time. The interest rates are going down. This is that. I'm sure all the people that aren't realtors or mortgage lenders are probably just thinking, wow, hold on a second, stand back. I don't even want to call any of those guys because I just feel like I'm just going to get bombarded with people pushing me to buy a home or sell my house. But if we can be the people that just try and help, say, hey, this is where property values are. This is a good time in the market for this or that. You don't need to sell right now. You don't need to buy. It just wanted to give you some information. Now we're pulling them along. We're getting some information. So when you're out there and you're marketing, you're talking to your clients, start thinking about pulling versus pushing. And I guarantee you, not only will you become a magnet and get more referrals out of it, because that's an insanely great way to look at it, but also you're going to have that client will probably end up purchasing or selling their home a lot faster. And they'll actually use you instead of going and find somebody else. So I wanted to talk about that. I thought it was super important. And I wanted to share a couple wins this last week. We had a couple deals that we did all together between Lindsay and Jake. We all closed, and those deals were closing between 11. I think we had 11-day close.
12-11.
So 11-day close. I think we did a couple of like 13 to 14-day closes. So just wanted to share some wins with you about how awesome that our team is here. So thank you so much, you guys, for getting deals done so quickly. And let's see what else. Oh, this stuff. So if you guys want anything, you just want to text rate to this number down here. We will get you rate updates on Mondays. Text open if you want any help at your open houses, or if you want any flyers. If you want marketing material, text that number. If you want any type of pre-approvals over the weekend, whatever it may be, we're here to help get you guys your clients the help that they deserve. And all the numbers on the board. And then I also wanted to give a quick shout out to these guys over here. I've done, I don't even know how many transactions over the years of 15 years I've been working with APM with these guys. And I appreciate all you've done for my clients. And I can't give them enough recognition. So I'm really excited to have you guys here today as well to talk and send them your clients because they're awesome. All right. Thank you guys. Appreciate you all.
Thanks, So real quick, speaking about JJ's pulling versus, oh, good call. Speaking about JJ's pulling versus pushing, sometimes it's hard in the moment to figure out, hey, what do I say when somebody says, no, I don't want to do that. No, I want to wait till after the elections. No, I want to wait till next year. No, I want to wait till prices come down or until interest rates come down. Would it be helpful if I provided you with 3 easy phrases that you can just internalize and use on a daily basis with these people? Yeah, I'm seeing some heads nod. Okay. Number 1 is, what's the benefit? Hey, I want to wait until next year. Okay, totally get it. You know, we're a no pressure company. What's the benefit? Like, what to waiting until next year? What's the benefit? Now you're understanding why they're understanding that. I'm going to wait until after the election. Okay, what's important to you about waiting until after the election? Okay, so what's benefit, importance, and the last one is advantage. I'm going to wait until what's another objection? How about you guys give me an objection?
Rates drop.
Rates drop. I'm going to wait till after rates drop. Okay, I totally get. So that's a little different because the advantage is kind of built into it, right? Like obviously they want a lower payment. Okay, so that might be so. What's the advantage? You can always ask, hey, what's the advantage to waiting until rates drop? Well, I think we'll get a better deal on a home. Okay, what's it then? And bonus questions. I gave you 3: benefit, important, advantage. Benefit, important, advantage, and then they think, okay, well, I want a better deal. Great. What's a good deal look like to you? Because what you may be thinking is a good deal may be completely different than what they think is a good deal. They may say, hey, a good deal would be if I can just get rates in the 5s. Well, guess what? We're in business. JJ can get them rates in the 5s. What if they want a certain percentage off of the sales price? If they want 2-3% off the sales price, that is happening right now in today's market. What if they want a good deal is, hey, I want them to cover my closing costs. Hey, that is happening in today's market. So benefit, important, advantage. Okay. And that comes to you from Dale Archdeacon. I did not come up with that. So what we have coming up next is, of course, Liz Anderson, and she's going to be speaking about reverse mortgages. Now, before Liz comes up here, I just want to share that I had her on the radio show months ago, and I thought reverse mortgages, this is interesting to me, but who else is going to really care about this? Who else is this going to resonate with? She got over like 20, like consistently 16 to like 20,000 views on my Instagram. She is by far the most watched reels that I've had. And so I'm thinking, okay, it can't just be me that's interested in this. There must be a lot of other people. So so the benefit of what we're going to learn about today is we're going to learn about how to help people buy homes and not have monthly payments. Okay. So Ray, please welcome to the front of the room, Ms. Liz Anderson.
It's around if anybody wants to take one, take some notes. And so, first of all, super grateful to be in this room, in the presence of, and all of you. Not gonna say, I'm gonna say I'm a little bit nervous today because I don't like to speak in public, and then for some reason to speak in front of people that I know the most happens to be make me more nervous. So I'm just gonna say that right off the bat. But anyways, thank you for having me. I have Des here. He's the director of our reverse mortgage group. And I have been in the industry just in this niche alone for 15 years. Des is the one that created our branch. And today we're going to share with you some things that are actually very poignant in the market. So, you guys have heard about that NAR settlement a little bit. We're going to share with you how a reverse for purchase can actually work in your favor with the current market condition. The other thing that we hear talked about very often right now is passing on generational wealth. Well, we're going to share with you how you can do that as well. So let's get started. We don't have to do the presentation. Des will talk about what will be on the screen, but for now, I'm just going to go off of my notes. Okay. So first question, actually, I was on Marguerite's podcast last week, and she's like, Liz, just tell me, what's a reverse mortgage? So a reverse mortgage in our terms now in our industry is also called a HECM. So a HECM stands for Home Equity Conversion Mortgage. And let's face it, every time you hear reverse mortgage, most of you will think, like people, consumers, it's not the best thing that people think about when they think about reverse mortgage. But we're here to teach you the modern reverse mortgage. When I sat down with Johnny and we did the radio thing, he was just like, wow, all the things that you can do with reverse mortgage. In particular, the reverse for purchase and how you as agents can grow your sales by using this financial tool. So what I'm going to talk about is a little bit about guidelines, sharing with you how to notice, how to recognize a client, and how to reach out to us. Also, we are an extension of JJ. So if you also have questions, JJ is knowledgeable and can also help you. We're a team here. Okay. So what is a reverse mortgage? A reverse mortgage is a loan that allows a borrower that's 55 or 62 years and older to access a percentage of equity in their home without ever having a principal and interest payment. Okay, so they're still responsible for property taxes, homeowners insurance, HOAs, any other property. So it can be used to pay off an existing mortgage and stay in a home and live quality of life, have a little bit more financial freedom. It can also be used to purchase a home without having a principal and interest payment. And that's what we're going to share with you down the line. So let's talk about some of those myths. There are a ton of myths associated with reverse mortgage because of what it used to be. So long time ago, before FHA and HUD stepped in to oversee this program, banks would create their own guidelines for their own reverse mortgages. So that's when you hear, well, I don't want to do a reverse mortgage because that's the loan where the bank owns my home. That is not the case anymore. When a borrower enters into a reverse mortgage, they are the owner of the home. They have a loan on it. It's getting bigger over time, but any point in time that they want to sell and move and take it to their remaining equity to a different state, they can do that. They are not stuck with this loan. Okay. So that's the first thing you should know, because people always still think, well, if I do a reverse mortgage, I'm stuck with it. You're not. So this is the first myth. I don't want to do this loan because that's where the bank owns the home. Like I said, they're the owner, they're on loan, and they're on title if they're of age. Client maintains ownership. We lend directly to a trust within the transaction. If you're doing a traditional loan, if you have a trust, you have to take it out of the trust and then remember to put it back into the trust. So they cannot outlive the loan. This is an FHA. We're going to talk about a couple of other programs, but the majority use in the market is the FHA reverse mortgage. All loan proceeds from a reverse mortgage are tax-free. So if somebody pulls out 200 grand from the equity of the home, those funds are tax-free. It does not create a taxable event because they're not receiving a 1099 at the end of the year. Loan proceeds. It doesn't affect Social Security or Medicare. Now, if they're on Medicaid and Medi-Cal, we ask that they get some type of written documentation saying how it will affect their benefit. Borrowers will never be forced to leave the home. So there's 4 rules that a borrower must comply by to keep a reverse mortgage in place. They must pay their property taxes and homeowners insurance on time and any other property fees. They must live in it as their owner occupied property, so they can't do a reverse mortgage, move out and rent the property. Now, if they wanted to rent out a room, they can do that, but it has to be primary residence. They also require for proper maintenance. If something breaks, fix it. That's it, proper maintenance. The debt does not pass to the heirs. So back when I talked about the old reverse mortgage, if a borrower used a reverse mortgage and used all of the equity in the home while they were living in the home, and at the time that the last person vacated the home, the balance of the home is here and the value is here. There's gonna be a shortfall, right? It's gonna be a short sale. So back in the day, they would come after the heirs and say, your dad did a reverse mortgage, we're 20,000 short, you owe us 20,000, we're coming after you, okay? That doesn't happen anymore. There's FHA insurance associated with this loan that protects the heirs from a loss, okay? And last but not least, there is counseling associated, third-party counseling, not approved, with a reverse mortgage. So if we sit down with a client and they're ready to roll and they say, we want to do this, this is the best thing we've heard of, they have to do counseling. It's about an hour. They do it over the phone. There's a small cost associated with this. It is out of pocket for them, usually runs about $200, but it's an educational checkpoint to make sure that they understand what the loan is doing over time, which is accruing interest and a little bit of mortgage insurance on the balance of the loan. And to make sure that they know their responsibilities, the rules that I told you, paying their property taxes, living in the home as their primary, and then maintenance of the home. And also to make sure that nobody is taking advantage of them. Okay. And we'll try that here. All right, on that. All right.
that water or is that from Oktoberfest?
Not gonna tell. All right, so what are some of the requirements? So we have programs, the FHA is 62 years and older. Now, a few years ago, that age dropped, and that dropped with some new programs that came into the market that are not FHA reverse mortgages. We call them proprietary, conventional in our arena, and those have gone down to age 55. And there's some pretty unique programs. Des will share with you what those are. Again, must be primary residence. All down payment, closing costs, and gifted funds must be documented.
Carry around.
There are no builder incentives or seller carrybacks allowed, and they must meet income and credit requirements. So let's talk a little bit about income and credit qualifying, because it's easier to qualify somebody on a reverse mortgage than it is on a traditional loan. So traditional loans, JJ's loans, are based off of ratios. They're ratio driven. For us, it's different. So we take all of the income from a borrower and we take their social security, maybe they have a little bit of pension, but a lot of times it's just social security. So we take all of their income, we run their credit report, we deduct all of their minimum payments from their income. We deduct property taxes, homeowners insurance, any other property fees like HOAs, and 14 cents per square foot of the home for utilities. Bottom line, if you have somebody out here in the West to qualify, they have to have $589 left over as residual income to live off of. So it's like they're spending money. If they hit that number for one person living in the home, they income qualify. For two people, it's about $1,000. And then on the credit part, we run a credit report. We're not FICO driven. We don't look at credit scores. So what we do look at is the last 24 months of payment history on their credit report. And then we also look at the last 24 months of property taxes and homeowners insurance being paid on time. If they meet those two qualifications, they qualify for a reverse mortgage. So it's much easier. We qualify off of residual income. So let's talk about some acceptable property types. Single family residence, 2 to 4 units, condos that meet FHA guidelines. So if you have a manufactured home, it does need to be on owned land. It cannot be on rented space.
3A.
What was it?
Oh, no,
Okay.
it's at 433A.
Okay, so then, so condos, manufactured homes, and then also PUDs, which we do have a few of those around here. So let's get into the nitty gritty. How does the reverse for purchase work? Okay, so you guys can't see this, but I'm gonna share with you a quick example. So we have a 72-year-old, let's take that age, and they're looking at a purchase price of 600,000. In order to come up with a loan amount for a borrower, we take the age of the youngest person who's going to be on the loan. And then we take the current interest rate and value of the home. We plug all of that into the software and it's going to give me a loan amount. So in this example, their loan amount is going to be 265,000. Their down payment is going to be the difference of that 600,000 minus the 265. So they're going to come in with 335 cash at close. So that's their down payment and be left with no principal and interest payment. Let's talk about some of the uses. You can use it to downsize or right size into the correct homes. Buy your dream home. So baby boomers aren't looking always to like downsize. They're looking for the home. So many times they're buying up. They're not buying down. Relocating closer to family members, medical facilities. And let's face it, how many people have we seen leave California? So you can use this in other states to relocate. Has anybody heard of silver separation? Call the divorce. So in a divorce situation, we've used it many times where one of the parties wants to remain in the home and they own their home free and clear. So they do a reverse mortgage. They have a loan amount that's available. They pay out the other spouse, right? They stay in the home with no payment. The spouse that gets paid out gets to go do a reverse purchase on the home that they're going to buy and have no principal and interest payment moving forward. Okay, so we see that happen more often than not. And then paying off an existing mortgage to stay in a home can also be used as a financial planning tool to create other income or reserves. I want to share with you a quick story about my parents. I shared this one with Johnny. So people often think, I actually had a phone call last night where the lady said, so this is a loan for people that are in dire straits. Absolutely not. No way. We're going to share with you why today. So in 2008, my dad decided, this is when the market crashed. So there was all these bank-owned properties, right? And first of all, let me rewind a little bit. When I got into reverse, my dad's like, what are you going to be doing for work? Because I used to work for a title company. I got laid off in the down market. And he goes, what are you going to be doing for work? I'm like, well, I got this job and I'm working for a reverse mortgage company. And he's like, well, what's a reverse mortgage? And I'm like, it's this loan where you don't make a payment. And he's like, what kind of shady job are you working at that doesn't make a mortgage payment? And so I was like, well, Dad, this is how it works. It's for older people, you know. And he's like, I'm not okay with this. Well, he gets into a car. He had always owned investment properties. He's a business owner. I grew up in the small town of Truckee. And so he was self-employed. He had a restaurant for 30 some years. So he says, I'm gonna go look at properties. And I said, you should get pre-qualified by JJ. And he goes, I'm just gonna go look. Well, that was always his famous words for he's gonna buy. So a few hours later, my sister called me and she's like, did you know Dad put a deposit down on a home? And I'm like, all right, here we go again. So he calls me. I said, send me over your tax return so I can have a traditional loan officer look at your tax return. So loan officer looks at it and he's like, yeah, no, this is not going to work. Tax write-offs, no income. So I call my dad and I'm like, well, we can't get you a loan. And he goes, but I have 20% down and I have great credit. I said, right now, things are so tight. I think you're gonna have a really hard time finding a loan. So he goes, well, I bank with the bank next door. I live in this town. They all know me. They'll give me a loan. Calls me the next day, no loan. So my sister calls me and she's like, hey, we talked to Dad about a reverse mortgage, and I'm like, absolutely not. I already know what he thinks about what I do, so I'm not gonna have that conversation. So he called me a couple days later and he's like, I need you to bring the package. You, your sister, mom, we're having a family meeting. We're gonna talk about this. So at that time, his house was valued at $675,000. He didn't owe anything on the home. At that time, his loan amount was about $350,000. The home that he made a deposit on was purchase price $180,000. He took out of the $350,000 that he had available, $180,000. He purchased that investment property for cash. He rented that house out for $2,200. He had no payment on the new investment property besides property taxes and homeowners insurance. He had no payment on the one that he did the reverse mortgage on. And then 6 years ago, he sold the one for $180,000 that he purchased for $430,000. He had some tax deductions because of the rental. He paid off the reverse mortgage because you can pay it off at any time when he sold his business. And best part of the story, he took the $430,000 from the sale and he bought a house around the corner from me now. This is going to be their retirement home for $465. So he put in another 35 grand. He made all of these transactions were made possible because he used a reverse mortgage as a creative financial tool, which people never think about. So when people sit with me and they go, well, if I was your parent, what would you do? I'm like, let me tell you a story. So with that being said, I'm going to pass it on over to Dad, and he's going to share with you some more purchase examples and more ways that you can use this to gain some more sales.
Thank you. Lynn. My mic up, we're good. So, thank you for letting us come in. You were gonna offer me a knife earlier, remember?
Yeah.
So what's this?
Philip.
Phillips screwdriver. When I started doing these in 2000, I thought reverse mortgages was this financial tool. It worked on one situation. Clients in dire straits, and we plug them in, and just like this, in, out, done. That one thing that tool can do, we go, yay, we helped them. But with time, what happened? We discovered it's one of these tools. Yeah, it's got the Phillips screwdriver, but regular screwdriver, a knife, pliers. I'm going to show you some examples so that you can utilize the tool to your advantage, blatantly compensating you to participate. So here we go. Oh, by the way, we're splitting. Yeah, you went big, we're splitting. So this is the quiz. FHA equals HECM, home equity conversion mortgage. The benefit is no monthly P&I payment, minimum age to be on loan 62. Got it? Okay, here's the quiz part for you. TIMP, T-I-M-P. This is what the client has to do to get the benefits. What's T?
Time.
Time. Time out. No. Yes. Title. No. Taxes. Who said taxes? Property tax. This is a trust exercise now. I can't walk down there. There you go. Okay. So yeah, you gotta pay the property tax. So what's I?
Insurance.
Too easy, no ticket. Okay, so here we go. Yeah, you're right. Insurance, you gotta pay the insurance. What's M?
Make payments.
Maintenance. Did you say maintenance?
No.
Then make payments.
Make payments. No payment. Except for tax and insurance. Okay, maintenance. I'll give myself a ticket. Here we go. And what's P?
Primary residence.
Primary, correct.
Surety 1,500 of that.
Well, now she's gonna get some additional cash. We're gonna do good. So it's primary residence. So what we're trying to do for the client is CAT, C-A-T, improve cash flow, preserve assets, asset preservation, make sure their assets can help get them all the way through retirement. This is the tool to help do that. And then again, we'll come back to taxes, but now we're talking income taxes. And as Liz pointed out, the money from a reverse mortgage is not taxed. It's not considered income, it's loan proceeds. Huge difference, and it gives you an opportunity to manage things. So traditional HECM, that's when they're staying in the house. 83% of the business, I got to show this to you,
you're the center of the universe for people, your clients, in terms of real estate. They're gonna look to you for advice. Should I list my house? Should I stay? What should I do? Here's the example. Value of the home, 600,000. They owe 100,000 and their payments 1,500 a month. And they're saying, I'd like to do some retirement stuff here. Okay, so as Liz pointed out, we put their age, property value, current interest rate into the computer, and it calculates LA, loan amount. Higher age, higher LTV. Higher interest rates, lower LTV, right? So it's calculated on each situation. In our example, the loan amount's 240. First thing we have to do is pay off the existing loan, which is going to improve their cash flow. We got rid of the $1,500 a month payment, right? And that left us with 140,000 left over. We used 100. There we go. Now, financial advisors will tell you there's three stages of retirement: go-go years, slow-go years, no-go years, right? Our clients in the go-go years are saying, hey, this is great, but could we get additional cash every month? Yes, what do you want? 500 a month. In our language, it's tenure, which means for life. Okay? Assume for the moment it's husband and wife. They're on the loan. Us guys, our warranty goes out earlier. She's still in the house, pays the taxes, insurance. It's her primary residence. She does the maintenance. The money keeps coming for life. So this would be 120. It keeps coming. That's what FHA is promising with the insurance. So we have to set aside some money to make sure this happens. It's just setting it aside, and it says, okay, at 140, set it aside for the monthly, and now we got 60,000 left over. We're setting it up as a line of credit. So it illustrates how they can receive the money. Lump sum, monthly payout, line of credit. So that said, we're gonna switch now. You might hear about this NAR thing. Yeah, but here's the advantage Liz alluded to.
Can we go back to that line of credit? So they can take that all out at once, or they can take it out in stages, or if it goes back, does it not accrue interest, or is it not accruing while they sit on it?
So it's a line of credit, just like you used to on a HELOC, and they can draw on it. There are some rules about how much they can draw on the first year. Rather than go down that path with you, we can explain it to you, but the idea is there's certain limitations in the first year, and after that, you can take all of it, the rest. Yeah, it's a good question. Is it ticket worthy?
Is it accruing interest
No,
while it's sitting there before it's been drawn?
no, only the money you use. All right, so get your trust money coming your way. So we got this client that netted 600,000 from the sale of their home. They went to go buy a house for 600,000. They're going to buy it cash. They have no monthly payment. Now, under the current situation, you go, well, how do you get paid then? Right? Well, they either negotiate with the seller, which means it's not a $600,000 house, maybe it's a 618 or whatever the number happens to be. And they go over to a 401k or an IRA, they pull out money, but they've got to pay taxes on it if they pull it out. So as the alternative, let's say, well, why don't we use the reverse for purchase? Now, in my example, we got 600,000 net. They're going to buy that same 600,000 home. The reverse for purchase loan amount's 240. That means our down payment has to be 360, and it came from the net, right? We're working on an easier slide. Just follow me. But what that means is we didn't use it all. We got 240,000 left over to pay people. So as a buyer, they could pay their agent. Well, what if you met with them right up front and said, let's look at all the different strategies. Let's plug this in. And they go, as a seller, I can credit to pay the buyer's representation. So they can make themselves more attractive as a seller. And there's one other thing that Liz alluded to. They could also, because even if they pay the buyer side when they're the buyer, the buyer side when they're the seller, they probably got a couple $100,000 left over, right? They could say to their kids or grandkids, I'm going to help you get in the house. Here's the down payment. Plus, here's the realtor compensation. So now you're very competitive in the marketplace. You provide a vehicle, call it a down payment assistance program, a family one. And they only, there's only a couple like criteria. Do I have the money? Yes. Do I like you? And if I don't like you, you're not getting the down payment assistance. It's kind of like the California one. So you're creating generational wealth. You have opportunity there. So we're downsizing. Current value of the homes, they're selling $1,000,001. Initially, they talk to you and say, well, we don't know what we want to do. We got an IRA of 500,000, got some equity in the home, some other assets. They're not very liquid, and we're still working. And we like to do a little stuff. Their monthly payment's $3,000 a month. That's after JJ took care of them. So here's the thing: is like we plug the information in and look at a reverse mortgage to stay in the home, improve cash flow, and retire. What's 440,000 is the loan amount. We don't have enough loan to pay off the existing mortgage. So they start looking at it and go, where do we get that money? Well, we got to go over here to the IRA, pull out 160,000, but then I got to pay taxes on it. And I'm compromising my retirement. And by the way, the house is too big. It was great for the kids, raise the kids, but it's too big. There's too much utilities, too much. It's too much. It's not my dream home. Well, let's downsize. So they list, sell, they net 445. We're going to buy a house, replacement house for 600. Reverse for purchase is 240. Down payment's 360, which is coming from their net. And they still have 85,000 left over. They didn't use it all. So they got into the right size home, eliminated their monthly payment, and had money left over, and actually improved their retirement situation. And that's one of the vehicles that can get this thing done. It's really good trick right there. Remember the tool, it's a great tool. Now, as the agent, you listed and sold. So let's say you're going to go look for these people. Start with who's in your database. I heard about a database project. Yes.
Forgive me, the 85,000 left over, does that have to go to the retirement, or can they go back to the seller for whatever, buy a boat, pay off?
Their money, they do whatever they want. Yeah, send you on a vacation, go to Cabo, buy that Southwest flight, so, right. So we're gonna go into the database. Now, if you got past clients, they got my hair color, and remember, the hair's gray, reverse can be either way. Okay, don't forget that. So they go in there and you look at it and say, they might be in the house that it doesn't fit anymore. It's too big. Might be in your database. If you're gonna farm, you might look at REI source, list source, those places. Zip code, value, upper end value, equity, 20 to 50%. They gotta have some equity. And then age
55.
We're gonna go 62 to 99 because we're primarily talking about FHA. And then you put other things in like true story.
Yeah.
Because you start out with one good need, one bad need, and then one day you wake up, you have two bad needs. It's time to get in a single story. And the message is your mortgage payment stand between you and a great retirement? We should talk. So they do surveys with people that are in retirement. They say, hey, you're coming up on retirement or you're in retirement. Are you going to move? This is done by the real estate industry. 37%, yeah, I'm going to move. What percent say I'm going to move up? Of the 37%, I saw this, which is 7%. Okay. Any other guesses? Two?
5.
47. Here's the context. My mom's 98. She lives in Tucson. She's in her own house. And she's depressionary. So she says, I want a house. Nice roof, floor's good. Okay, community. Like it. We're dealing with boomers. They don't want a house, they want the house. So they're looking at that house around the corner that they've been walking by since COVID started. And they find out, hey, you know what? That's one on the market. Their current house is worth 500. And they also have an IRA. And by the way, if you look at this, and this is the same with the prior slide, these guys don't owe anything here. It's a millionaire on paper. And the question is, should a high net worth person look at this? The answer is, wouldn't hurt. Okay. So they're looking at it and say, well, that house is coming on the market, let's sell, we're gonna net 475. And we're gonna buy the $750,000 house down the corner around the street. And we're gonna use a reverse for purchase. Calculated loan amount's 300, means we need 450, and they have no monthly payment. And we got rid of, went from no monthly payment to no monthly payment, but got them in that dream home, okay? And so you say, well, they even had a little money left over, and no, they don't have to put it into the IRA, but it's more money for their retirement, more reserves. Marketing, zip code, low values, so we're gonna move up to higher values. And equity, 80 to 100%. We want a real strong equity position in 62 to 99. And the message is, if you want to purchase your dream home, but we're afraid it's going to create big monthly payment, we should talk. But you have a solution. Oh, I got like 2.5 minutes. I'm gonna go like crazy. This is a Liz example. The client came from San Diego with 900,000, and they were going to buy a house in El Dorado Hills for 750 cash. And when they do that, they have no monthly payment and they got 150,000 left over. Reserves, good deal. Well, we talked to them, and their motivation is to have things to pass to their heirs, the 2 daughters. And Liz talked about it. If you do a reverse, here's the value of the home, here's the loan amount, but you're, not making a payment. The interest and mortgage insurance has to go somewhere. It's added to the loan, it gets bigger. And the presumption is values go up, but you could eat into the equity of the home. So keep that as background. So we talked to them, said, well, we have an idea. What if you buy your house with a reverse? Now, at the time, rates were lower, so loan amount was a little higher. 375 loan amount, 375 for the down, no monthly payment, just as though they bought it cash. Okay, good. They came into town with 900,000, and we used 375, 525 left over. And we said, we're buying a rental house cash. So they bought the rental for 400, rents 2,000 a month. They still had reserves of 125. What typically happens to property values over time? Yeah, they tend to go up. So this guy has no debt against it, and it's appreciating in value. Okay, over here, what do rents typically do? They tend to go up. So you have this cash flow you created, and it has an adjustment for inflation built into it. Now, most times this age group is looking for simplicity, but in this case, they're going, we'll go more complex because this gets us where we want to go. Kind of cool. So you create cash flow, asset preservation, and possible tax benefit for having a rental property. So here we go. Last slide. Yay, get done. Okay, here we go. We're just about right on time. So we talked to the client, and Tom sent over to me. I forgot to wear my orange today. I really feel bad. I went with gray. I'm so bland. But next time.
That's right.
That's cool. I'll just crack it up. So I go to talk to the client. He goes, I'm 64, but I'm not the issue. But let me tell you what's going on. My mom lives across town. She's 86. And I check on her a couple times a day, every day. But here's my Friday. I go over laundry, housework, yard work, pay bills, all that stuff. And I love my mom, so I'm going to do this stuff, but it also means I stay there and I go into the Saturday, and about noon, I go live my life. And this kind of tough. Let's look at situations and options. The value of his home's 350. This is back in the time when it actually happened. And he owned it free and clear. Say, do you love this house? Yeah. No big deal. All right. So what if we sell it and we net 325? Let's go look for the big house. Now we're going to move mom in. Here's her area. We're going to move you in, and here's yours. Yeah. He goes, I love my mom. She's great, but under the same roof, there's going to be CSI people showing up. So there's going to be pillow therapy. Something bad's going to happen, right? We can't do that. All right, well, let's not do that. But at the time, there was there was a fourplex on the market. This was in Woodland, going for 650. And we said, okay, remember Liz told you 2 to 4 units. So you got to occupy though. So reverse for purchase is 325. The down payment's $325. It came from the sale. And we get them in with no monthly payment. They came from no monthly payment to no payment. And we're gonna put him in to his unit. Then we're gonna put mom in to her unit. And the commute to take care of mom's like 4 steps, right? And this wall right here is bulletproof. We're gonna get along, okay? So here we go. We got 2 units left over. At the time, those would rent for $750 a piece. So there's that rent. He also said, I'm gonna take a little bit of money and take care of mom part-time. You'll free up some hours for me. At the time, it was like $1,000. They sold his house, but they decided to keep hers and turn it into a rental. 1,500 from that, 1,500 rents here. Take out the 1,000 for part-time care. We got 2,000 a month positive cash flow. We started with 700,000 in real estate in the estate, but now it's $1 million of real estate in the estate. 4-step commute, protective wall, 2,000 a month positive cash flow, and possible tax benefits because we have rent reserves. And what that taught us is, you sit and talk to the client, you don't know. You got to ask the questions. You got to pull, right? And you just ask questions. What's pain? How can I help? Let's figure it out. So reach out to JJ with questions. And again, thanks for letting us come in, spend some time with you. I'm 12 seconds over, so I'm going to shut up. Yes.
Small question, am I wrong to assume that the reverse for purchase interest rates are higher than prevailing rates?
Let's see. So almost always they're using ARM. And the reason is, it's main thing is you get more money. Okay. The rate on that one right now is roughly 6.5. So it's that much more.
So they're kind of close.
Yeah, it's not that big deal. Yeah. Good question. Ticket worthy.
I think that's where they.
One opinion. All right. If you don't mind passing down, yes.
I'm very new to this. So what would be, if any, the negatives to that type of finance?
Okay. Leave. So here's the thing, it's like, the question is, what's the negatives? And the idea is like, look, there's 2 things they say. Look, I asked the client, are you staying in this house? Is this your long-term house? No. Why are we thinking about this? I want it to be the long-term, okay? Are you okay that over time you might consume some or even all of the equity in your home if you live long enough? That's the potential, okay? And you look at the benefit, they're going, I don't care. I get to live financially independent and free. So they could use up the, the equity in the home. That's a possibility. And the other is that just that if it's not their long-term home, we shouldn't be even looking at it. Problem.
The negatives I've ran into is typically they own their house outright.
Yeah.
So 750,000, and they probably want to buy another 750 or 600, and they want to buy it cash. And they don't want to get a loan. And to them, this costs fees to do it, and it's a loan to them.
Like any loan, there's fees, and then you always have to weigh what it costs versus the benefit, right?
But the investments are good.
Yeah. Well, here's the other thing.
Yeah.
Think about markets out there. You go, well, the client owns the house free and clear. We set it up, the whole thing's a line of credit. The line of credit is growing over time, the money you haven't touched. So that becomes money they can use in the future. We took the slide out, we went too long anyhow, right? But the point is, you got this line of credit, and now you can start building generational wealth by using the money, by gifting it to kids and family members. So the approach would be, hey, I know you're set, but you want to help your kids start to build generational wealth. You have a great conversation in front of you.
Or you want to help your mom sell yours and help your mother. That was a good one. The 4plex.
Well, thanks. It's not worth another ticket, but that's good. Thank you. Yeah, sure.
You might just educate the agents about Prop 19 and how the seniors can transfer their current tax base for the Prop 13 was within on Prop 19, I believe.
So
Certain counties, you're allowed to transfer your tax base.
I believe all counties.
That's the rule.
Statewide
So,
now.
yeah, and I leave that to the tax looking
CPA.
people. Yeah, but you're right. That's a good point. It allows them to have that mobility. Yes.
I'm
I'm Lindsay. I work on JJ's team. I just wanted to give an example of where this can be a really good for your clients that when someone needed to take one of the loan officers at a branch. He needed to, 7 years old, needed to take out $40,000 for some maintenance. He only has $1,200 a month in Social Security. He can't qualify for a standard home equity line of credit.
Right.
And so even though he wants the money and he has the equity, traditional mortgage can't qualify to give it to him. And so he ended up doing a reverse mortgage, and it's a wonderful benefit for him, and he has access to that additional equity line down the road. And it's, his way to access his equity.
That's a really good point. And there's one additional thing. On a traditional home equity line of credit, what happens if housing values go down or, the market's kind of looking bad? What do the banks do?
Close it.
They close it. This can't be closed as long as you pay the taxes, insurance, maintenance, and it's a primary residence. That remains available to you. That's the FHA insurance speaking. So thank you for that example. And again, thank you for letting us come in.
I want to say one last thing and we'll be done. So there's also, there is a newest program out in the market. It's actually a reverse mortgage second, right? So how many of us in this room and also age demographic that had a low rate first, like under 3%, and who wants to get rid of that right now? So a reverse mortgage second allows you to leave the first loan in place with that really low rate, and then you're able to possibly access a second, and that second is going to allow you to get some cash out, and again, have no principal and interest payment. So keep that in the back of your mind. If you have more questions, reach out to us.
Does that one work on the same variable of the 72 years old age?
Actually, that one is age 55.
Okay, what I mean is the cost structure, the payout amount, is it calculated the same way as the other
So
one?
we take, it's like a combined LTV, and it's a sliding scale based off of age. So
I understand that. What I'm asking is what it's based off of. Is it based on the same formula that a traditional one is? Or is it a
but
more
it's very
conservative
simple.
formula?
No, but it's very similar.
Okay,
Yeah.
thank you.
you're welcome. Thank you, everyone. Sorry. to take a little bit of time.
Let's get guys. Right, real quick, we covered a lot of different things today. We're gonna go over 3 things. What are your 3 takeaways? Give me one. What are you gonna take away and use? Barry?
I think that reverse mortgages, and I've always thought this since the first time I heard her talk, are one of the most underutilized tools in the world. And the main
Absolutely.
reason is people don't understand them.
Exactly.
Oh, yeah, and agents don't understand.
Well, you don't have to. You got Liz. Right? Right, what's number 2?
I think as you get older, don't save money for your heirs as much. Go enjoy life.
Yeah.
Smoke them if you got them. And then number 3. Tom.
Well, I didn't know that you could use a reverse for purchase, so that was a light bulb, but also I love the example that you gave of turning $750,000 asset into $1 million by using it to buy another investment property, and now you just increase your wealth.
Incredible leverage.
You got benefits, tax benefits, retirement, checked all the boxes.
Yeah.
All right, guys. Thank you so much. Have a fantastic day. See you next Thursday.